Ticker symbol T.O.P.
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 T.O.P. Top was a complete widowmaker.
T.O.P. will live in infamy. It wasn't the loss that I wanted to take, but it was the loss that I was glad I took. I was the guy covering right before close in the 18 and 19 area. Within hours, it was at 260. 19 to 260 is a quick way to blow up an account and end your career. There comes a fine line in a trader's career where you have to decide whether you're going to be the guy to cut losses quickly and intelligently, or if you're going to go for a ride. And there's no way to have any kind of longevity or survivability if you put yourself in the way of harm. And T.O.P. was in the way of harm, and it was obvious.
Guess you'd call this my confession on how I traded top T.O.P., the ticker T.O.P. You know, in 1 to 2 words,
Dog shit.
disappointed and unnecessary. There weren't any necessarily huge rules I personally broke. I just was too aggressive and I kind of got the worst outcome, right? I kind of went into it. So I was like, you know what? Where's kind of the max amount I can afford to lose? And it went there and I lost it there. And there's a difference between a loss you can accept versus willing to accept, right? And so it's like,
What did I suffer? What problems did it really come down to? That's what I've been kind of asking myself. Do I even want to put myself in this position ever again? Is it avoidable? Is it controllable? These are things that I really have to go back and journal. And I think as a trader, everyone has to journal. Everyone's got to go over their biggest losses and their biggest wins. Understand what factors, whether chart-based, technical-based, fundamental-based, or psychologically based as to what went good or what went bad. What went bad for T.O.P. was my psychology. I came in way overly biased. I'm thinking that there was this fresh IPO stock with Chinese ties and a history of dumping 70 to 80% in a day. So when I saw it doing massive volume and repeating what it had done in the past, I was overly biased into thinking that it was going to do the same thing again. And so I was shorting bullish price action. Everything in front of me was screaming higher lows, tight consolidation, breaking highs, upward price action, right? Upward trending. And I didn't come in with enough of a game plan to really be able to control what kind of volatility the stock was really going to have. And as a trader, you have to be aware of black swan events, that risk that you don't prepare for, that risk that can come out of nowhere and knock you off your socks. That's exactly what this was. In the process of me losing on top, I'm really glad that I was able to stick to my process. My process does not allow me to oversize on stocks. It does not allow me to have too much leverage in a stock. It allows me to be in a position where if I lose 100%, 200%, 300%, 400%, I'm not blowing up my account.
I mean, this thing blew up so many accounts. So many people took a lot of losses. If you're one of them, I'm incredibly sorry. One of the things that is so dangerous about a move like this is we often forget that a very exotic parabolic, like a move from 6 to 24, or whatever the high was on the first day, that's very rare. But to become an incredibly exotic move, that is how they start. They start with a crazy move, get crazier, and then crazier and crazier, and we don't know how crazy something is going to get. I had no idea it was going to head to 256, or even 100 for that matter, or even 50 for that matter. The highest I thought it would go was about 50, and that was blown out by 5x. But anyways, when I was trading it, I shorted about maybe 200 shares in the morning. I took a small loss. I had 2,000 shares of locates. And the reason for that is because if the stock went to 12 or 15, that would be about a $25,000 to $30,000 position, which I'm very comfortable managing that. And if it went to 20, that would be about a $40,000 position, which I typically don't want to trade positions like that because I can still manage it, but I don't want that much size because I want the position to work for me. I want the market to work for me. I don't want to feel like I'm squeezing water out of a rock. And to me, I want to treat every trade as just another trade. There's Pareto's law, or the 80-20 rule as many people know it, that basically says that 80% of our gains are going to come from 20% of our trades. But that doesn't mean that when something comes around, you just throw a bunch of money into it unless you have incredible risk management. You're very strict with your stock selection process and you're very patient for the exact moment. It's a very, very tough thing to master in the market. For me, the way that I like to see that rule is I put on nearly the same position, same risk every time. And when the market gives me a gift, I'm already positioned and the market capitalizes for me. And that's what's going to create the home run. So instead of making, let's say, a few thousand, it would maybe be $6,000 or $7,000.
So that's the one saving grace. I have a process that keeps my total equity of a stock and my risk to some degree in check. And even when we're out of the confines of my risk reward of what I'm comfortable losing, I can still lose and be comfortable. That was really important throughout this trade. The other thing that was really important throughout this trade was I never added to a loser. I had a plan going in that I wanted to short this stock, that I knew there was going to be a squeeze, that I wanted to be small size, because we've seen absolute crazy tickers this year go to insane market caps, let alone percent increases. HKD, AXTG, ILAG. Now we have T.O.P. Again, the two things that really saved me in this trade was one, not adding to a loser. The second I identified the fact that I was in a bad situation, it was all about covering. It was all about how do I get out of this? It wasn't about how do I mend the situation? How do I repair it? I knew that I had already had the wrong strategy to start the day, and it was just about playing defense. It was not about playing offense. That was really important because, again, the stock went to 260 and I was short from 9. I did cover in the 15, 16, 17 area. I was covering into the afternoon. The other thing was just over confirmation bias. Again, like the whole thing that I can't help but reflect on was that the price action itself was screaming that it was a bullish trend. And despite it being so bullish, I couldn't help but click the button to be short. That's the degenerative side. That's the side where I think a lot of traders succumbed to this past week. When you don't have solid setups continuously and frequently, it allows for a big margin of error in terms of position sizing, timing, and it's not just me. It's everyone, as you're going to see.
T.O.P. Top. That was the ticker that got me for my most recent big loss. It got me for $58,000.
$40,000 for me.
Me personally, I never really got too involved with it.
Ended up taking a couple $100,000 loss. Okay, guys, Jack Kellogg here. Wanted to go over recent runner from 6 to 260 in one day. Absolutely unbelievable Chinese manipulation. Caught myself and a lot of my friends, caught the entire trading community really, who shorted the stock. I was actually shorting the stock at a very low price of 6, 7, 8, 9, 10, 15. And ended up taking a couple $100,000 loss, which wiped away all my gains in April, which was very discouraging considering in March I did the same thing, which I went over in my last video. Make sure to check out all the YouTube videos on Clover Trading. And I've really learned one thing. It's that you have to do some type of risk management. And in hot markets, it doesn't matter if you take a large loss because there's another A+ setup tomorrow. There's another A+ setup a few hours from now. In slower times, A+ setups do not come around every single day. And usually in the summer, we're taught to believe that there isn't going to be a lot of good trades per month. So I'm up a bunch of money usually at the beginning of the month, and then I give it all back towards the end of the month, the last 2 months. And I'm so sick of doing that. I'm so sick of the stress of potentially having unlimited losses on the short side, blowing up accounts. That's never happened to me, but that's always a fear in the back of your mind that you hold on to. So what I'm doing is I am implementing a max loss per ticker on my account. So if I take a full size loss, then it's going to auto liquidate me and I'm not going to be allowed to trade that ticker again. Because with Top, it was the more you traded, the more money you lost. Doesn't matter. You went long, you went short. It's just not a ticker that I do well at with the big spreads, the lower type liquidity. I've talked about this on previous videos before. So it really messed me up. It's quite sad. Yeah, now I have a max loss for the remainder of the summer. And now I've taken away that fear of potentially losing hundreds of thousands of dollars in one day. Because all you need to do is get rich one time. I've gotten there. I've made millions of dollars trading in the stock market. I don't need to take massive risks. I've already taken massive risk. I'm aging. I'm now 25, right? I've been trading since I was 18, 19. I've done it. I've put myself in the risky positions. I made it. I don't need to risk a ton of money anymore. And it's the same thing though if you're a beginner. You don't want to blow your account right away. You want to really have that knowledge compound. I'm so thankful I didn't blow my account in 2017, 2018, 2019. And then when 2020 came around, you could be a little bit more loose because the market was so hot. There were so many opportunities, like I was saying. But when the market's a little bit slower last year, this year, and we're seeing black swans, they're taking people right out of the game because everybody's waiting for a volatile stock. Everyone's waiting for opportunity and then they see it and you don't understand how quickly you're down 100%, 200%, 300%, 500% on some short selling setups. HKD, 15 to 2,500. AXTG, 15 to 1,000. Top, 6 to 250. Blow up type situations. If you're getting short at 5, 6, 7, 8, 9, 10, you're going to get blown out to 15, 20. But then if you hold from at 20 and it breaks that high of the day and it goes to 30, 40, 50, 60, 70, 80, you're losing everything almost guaranteed. Even if you have a small portion of your account in there and you're losing 500 to 1,000%, you're done, out of the game. So get those max stops in and do not blow up your entire month, year in account.
Peace.